Let's do a final accounts problem. Trading account, profit and loss account and balance sheet from this trial balance of Messrs G Vaishnavi Visuals. So we have on the debit side goodwill. Goodwill is an intangible asset. Then land is an asset. Salaries are office expenses. Depreciation is a charge on assets, fixed assets like machinery, building, furniture for the regular usage, obsolescence and the wear and tear. Purchases is a pre-production expense. We buy raw material now. Then we have debtors. Debtors are assets. Cash is also an asset. Conveyance refers to here transportation. Then we have internet charges, office related expenditure. Then we have stock on the 1st January 2020, that's opening stock. After closing the trial balance, we have one more stock, 31st December 2020. The stock was valued at 40,000. So this is called closing stock. So before preparing the final accounts, we have to just mark it in a short form, just below or before these items, where it goes. T account, trading account, DR, debit side, like that. We can have abbreviations. A side in BS means asset side of balance sheet. L side in BS means liability side of balance sheet. DR side is debit side. CR side means credit side. T account stands for trading account, as we have discussed. P&L for profit and loss account. So let us see first debit items. Goodwill, land, A side in balance sheet means asset side in the balance sheet. Debtors, cash goes to the asset side of the balance sheet. Then we have stock. For opening stock 1st January, it goes to the debit side of trading account, the first item. Never again it will come. But after trial balance, we have one more stock on 31st December, that's the closing stock, 40,000. It goes to the trading account credit side and is also appearing in the asset side of the balance sheet, because we prepare the assets value on that day in the balance sheet, the last day. So we know goodwill, land, debtors, cash and stock are assets. Then we will see the other items on the debit side. Salaries, depreciation goes to the debit side of P&L account. Purchases is a pre-production expenditure, buying raw material for production, right? So it goes to the debit side of trading account. Conveyance and internet charges are office related expenditures, not factory. So they go to the profit and loss account, debit side. Now coming to the credit side. We have capital, creditors, loan from Bank of India, loan from Angel, bills payable, all are liabilities. So they goes to the liability side of the balance sheet. Sales is an income, so it goes to the credit side of trading account. Creditors are also liabilities, we have to pay them now. So it's a liability going to the balance sheet liability side. So let's draft, one more item is there. Credit side, we have the closing stock, credit side of trading account, as well as asset side of the balance sheet. Then the trading account. Opening stock 45,000, purchases 77,000 on the debit side, no other item. Credit side we have sales 90,000, closing stock 40,000. So total of the credit side is 1,30,000 and that is higher compared to the debit side. So debit side there is a deficiency and that will be gross profit, that is 8,000, which will be transferred to the profit and loss account credit side. So we have started profit loss account. So we have salaries 35,000 on the debit side, depreciation it's 3,000, conveyance debit side 1,400, then internet charges 9,000. Actually we have more expenses here compared to the incomes. Income is only one, gross profit 8,000. This problem will not have any other incomes. We have actually a loss. So loss of 41,400. which will be deducted from capital, where in the balance. Let's prepare the balance sheet. So we'll start with the capital, that is 2,80,000. We have a loss 41,400. So that we have to deduct from the capital. How much debt? 2,38,600. Here in this problem we have two creditors. Their names are not given, but two creditors are there. Generally one creditor's amount will be there, but here creditors are there. So one 40,200 and other is 41,000. Next we have loan from Bank of India, loan from Angel, and bills payable. So that comes the total to 4,55,000. Now let us have a look at the assets. We have goodwill 1,50,000. Then we have land 2,35,000. Then we have debtors 20,000. Cash 10,000, stock 40,000. So total will be same 4,55,000. Automatically the balance sheet has been tallied. So the balance both the sides is 4,55,000.